Hi everyone, so it's Friday 20th of March. It's also quadruple witching today as well, so we expect some volatility in the final hours of the US session. I'm sitting here in the UK, so this is my time here at nearly 5 p.m. So we have a couple of hours left before the session closes for the weekend. But I just wanted to talk about this. It's not so much a prediction, but more of an opinion of where I stand right now. And this is with some analysis on volatility, analysis on geopolitics, and of course, some of the commitment of traders' data that we look at as well. So, what am I saying here is that we see a repeated pattern, somewhat similar to last year in in March last year. So, and there are other variables that come into play here, but the long and short is that I expect now at this current level at 6547, I have been saying it for a few weeks now, that we're going to see maybe a little bit of a retracement if that happens at all, but there has to now be this decline that comes fairly soon. And amongst other things, one of the key variables that I look at here is the moving averages over here. So this blue line here is the 20 period moving average. The pink line here is the 200 moving average, and the yellow line here is the 400 moving average over or daily moving average. So there are some of the indicators that I use when I form this opinion, but also we have some kind of like elevation in volatility turning out here as well. I shouldn't really have these moving averages here. This is pretty useless. But we have some some indicator that some indication that volatility is now on its way up. And then I have another chart that I look at to assess the volatility premiums here. But things are generally looking quite stressed in the market at the moment. So let's go through the SPX again, the S&P 500, and just look at what is that key level. Why have I chosen this kind of like 6200 mark or 6150 mark as the bottom? And that's mainly because we have this kind of resistance level over here, support level over here, and we expect, yeah, I think we may, if we're going to go as low as this, then it may just extend to these kind of levels before bouncing back. But I do actually see 2026 to be a year where we just kind of hover around this kind of level. We may go all the way lower, but but that opinion right now is a little bit blurry, and I need to formalize that as and when we get into this kind of territory of kind of 6,500 and then around here, which I expect to happen over the coming weeks. And this is pretty inconsistent with April last year, because if we go to April last year, we would have seen that we had this crash into April. If I recall, that may have been the yen carry trade. Was that in August? I can't remember what the reason for the, oh, it's the tariffs, of course. So this was the news on the tariffs that kind of just drove the markets crazy. That recovered, and then we just had, kind of nearly kind of 1,800 points just come off the back of that. So I see something similar, but not until the end of 2026. So I think 2026 is going to be generally a down year, and we may end up at kind of like 6,250 or thereabouts. It's a brave commitment at this stage. Let me now transpose this into the E-mini S&P future. Obviously, that's what we can trade. And let's just look at some of the levels there. So here we go. Let's go here and let's go onto the 4-hour chart. We're now on the June contract, by the way, so it changes today, so the prices may be a little bit funny. Let's get that looking nicer. So yeah, so this is where I initially shorted this, and I still expect we're in extended trading hours here. Let me get that back to regular trading hours and just see if that same chart carries through. I'm gonna pause. Yeah. So this is beautiful. Look how only a couple of days ago, so last week, can you see this 20 moving average came down below the orange line? So the blue line came down below the orange line. So that was a very strong signal that, at 6832 or thereabouts, we are now kind of nearly 300 points or 250 points down from there. And it's a brave comment to make, and I don't shy away from getting this wrong, but it could just continue from there. Well, I'm adamant that it's going to continue there for another 200 to 300 points down as well. So the key levels here, we are going to continue to sell into strength. That is going to be the mantra for this year. Any strength that we get, we're going to do two things. With indices, we're going to just short or sell close. We don't want to really be, unless there will be some very risky opportunities where you could go take bullish trades, but you have to be really brave for that. And I'd recommend you're very well protected if you do that. But otherwise, any strength we see, we're going to just start shorting that down. We could even see little formations taking place here now, which is like a 30, 40 point formation. But I want to see more strength than this. So what does that strength look like? This is where I kind of like hone in or drill down into a 30-minute chart to see now over the coming days, what does strength look like to me. So over here we have a key level, that black line. I don't know why that's there. It may be a gap fill that we're looking to achieve. Yep. So we have some kind of gap fill here that we're looking to achieve. It closed like at 6724 on the 17th of March. So we may expect that to fill. We may expect that gap to close. So we may expect some kind of reversion back to the tune of maybe 100, 150 points, especially in the coming hours. We may see some surprising spikes. I'm not sure which direction, but we'll see some surprising, interesting behavior because of the rolling over of contracts into June. So 20th of March is just a peculiar day in the markets anyway. So we may see that. But if I get this kind of level, if I get 6674 and a little bit of an overextension beyond that to maybe 6686, for whatever reason in this market, the number 666 is always cropping up. It always likes that. There's a lot of activity around that level here, which is in. But anyway, uh, I'm not going down that route. And then at best, I would expect if we come to this 400 moving average, I'm definitely going to be putting some big positions on the downside. Okay, so let's look out for that. Right now, you have to be super brave if you want to take any long positions, but you'll not get the best short position that I believe possible. We do have possibly some upside. And if I don't get that upside, then so be it. We review, we drill down again and see, okay, have we missed it? Even on the 5 minute, we still see that there's potential for some upside into 6665 here. There's that number again. So the opportunities are coming in now. Keep an eye on the markets this evening, 20th of March, and see how we go. So that's a quick weather report, thinking out loud, and just waiting for those levels. Going to set some alerts, and of course in the next video I'm going to talk about the tape over here and how we look out for that and the movement in the tape. This is the time and sales to watch out for the best point to get in to positions. Okay, so we'll have that conversation in the coming videos.